Welcome to Blockstars, Ripple's podcast that features leaders and developers in crypto and blockchain to discuss the latest trends, technologies, and the real-world problems being solved. I'm your host, Ripple CTO David Schwartz. With the first quarter already behind us, we're diving into the key trends and predictions that are set to shape the blockchain landscape in 2025. My guest today, someone I know pretty well, Markus Infanger, Senior VP at RippleX. Markus, great to have you here.
Hey, David. Super excited to be here. Thanks for bringing me on. Just want to greet everyone out there listening. As David mentioned, I'm the SVP of RippleX. RippleX is a business unit at Ripple that really brings together the company's core contributions to the XRP Ledger, layer 1 blockchain, as you all know. And look, been here 6 years now, before 20 plus years in traditional finance, focused on foreign exchange. And yeah, super excited to talk about crypto industry prediction with you, David, today. Excited to dig in.
You know, a lot's been happening. 2025 is already here. It's been quite the year already. The blockchain space has been evolving rapidly. There's been huge changes in the regulatory space in the United States. There's been tons of technical innovation going on. So we're going to have to try to predict what the future holds. I've got some predictions I'd like to share, and I'm excited to hear yours too, Markus. Let's talk about the rise of ZK-powered DeFi. It's a technology that's been I've been super excited about. My background as a cryptographer, seeing new crypto primitives that have real-world use cases. And I think it's going to drive some institutional adoption, going to be a game changer in addressing that challenge between balancing privacy, security, scalability, and interoperability. How do you feel?
Yeah, look, I couldn't agree more. I think zero knowledge proofs, on the one hand, really can open up the space to institutions more. For instance, the ability to guarantee privacy without revealing sensitive transaction details or information is crucial for things like regulatory compliance, but then also maintaining user safety alongside. And so it's also essentially a big reason why at RippleX, we've been doing quite some research already into this topic and see how we can integrate ZKPs into XRPL. What's also exciting is that it's not just about enhancing privacy. It's really about giving decentralized finance or DeFi a structure that institutions can trust, particularly around things like compliance concerns. And so if you combine zero knowledge proof with things like decentralized identifiers or verified credentials, which are both coming on the XRP Ledger, as you know, David, they're really set to enable selective disclosures of things like KYC, AML, without really revealing the unnecessary details. And so pretty excited about it.
Yeah, scalability, security, and privacy have been like the three biggest challenges. And it looks like these zero knowledge technologies can help us balance all three of those. With ZK rollups obviously being a big improvement in scalability, which could be a big factor in making DeFi accessible for institutions. With the focus on regulatory compliance, combination of zero knowledge proofs and RippleX innovations like XLS-ADD could see a new wave of DeFi applications that meet institutional needs without compromising security.
Yeah, totally. First of all, for those out there not familiar with XLS-ADD, that's permission domains, which is a specs that's basically developed on the XRPL, an amendment that's set to come hopefully live pretty soon. And so that basically combines verified credentials and decentralized identifiers to create environments on the XRPL public blockchain that can accommodate things like, regulatory compliance and so forth. And look, from a scalability standpoint, having zero knowledge proof integrated into DeFi protocols will really allow these protocols to handle more transactions without sacrificing performance. And so that's super important as the space intends to scale more and go from the billions at some point, hopefully into the trillions. And it will be particularly important as more and more institutions look for real world solutions using blockchain tech. And look, bottom line is it really feels like 2025 may well be the year where the next wave of institutional-grade DeFi could start to emerge based on ZKP-powered DeFi.
Yeah, I think that theme's going to come through a lot of our predictions that the main activity in 2025 is going to be around institutional DeFi. I don't think it's going to be a big year for sort of retail adoption yet, because I think we're still a little bit too early. I think institutional grade DeFi is going to create the things that the retail adopters are going to want, in the coming years. And I think that segues nicely to our next area, which is real-world asset tokenization, which is it's an enterprise adoption. It's institutional, but it's going to pave the way for more retail adoption. So I think I'll make my second prediction that purpose-built tokens will transform real-world asset tokenization. Tokens that will enable dynamic and flexible representations of everything from commodities to treasuries, financial instruments, money market funds, real estate, I mean, you name it.
Yeah, that's an exciting prediction. And look, tokenized real-world assets are already showing great promise, and I think they're going to become much more sophisticated in the next few years. Now, if you consider like tokenized treasuries, for example, or money market funds, they're quickly gaining traction, as evidenced by a partnership we made with Archex sometime last year, and they're deploying tokenized parts of Aberdeen's £3.8 billion US dollar liquid fund on blockchains, including the XRP Ledger. And so these low-risk investment vehicles definitely show promise for, with higher yields than, for example, stable coins, and allowing investors to optimize return while minimizing risk in their portfolios. And so I think with purpose-built tokens, the idea is really to create token formats that can carry rich metadata directly on the blockchain, representing everything from ownership to rights and conditions of the assets, including different cash flow streaming aspects and so forth. And so it can, on the one hand, make things like fractional ownership and compliance tracking much more seamless, but it really will help to bring more sort of like, financial business logic of these types of assets on chain. And I would say basic premises, the more you can incorporate on chain without, a lot of red tape and intermediaries like in traditional financial system, the more you can harness the promises of this technology and sort of like contribute to more productive financial markets at large.
13 years ago, the XRP Ledger became the first blockchain to support an asset that was not a cryptocurrency. And the XRP Ledger is leading the charge again with its forthcoming multi-purpose token standard, which offers infrastructure for managing complex assets, not just representing the asset, but capturing all of its attributes, crucial for institutional adoption.
Cool. XRPL is literally the OG of tokenization before the thing even was a thing. That's awesome, David. Thanks for calling that out. And look, when you think about real-world applications, the XRPL's features like, things like authorized trust lines has been there for a while, asset freeze capabilities will really allow issuers to ensure they remain compliant while offering flexibility in how they structure and manage assets. And so in 2025, I definitely see more financial institutions leveraging things like multi-purpose tokens. That is, by the way, still undergoing voting on the network by validators. But yeah, expect to see more financial institutions leveraging this feature to tokenize a wider range of assets with more transparency and security once it gets live. So excited about that.
So my third prediction is about what's necessary for mass retail adoption, for ordinary people to adopt blockchain networks and DeFi as like their go-to for financial services. And that's the same thing that makes the internet so great. What makes the internet so great is I can go to any website. I don't have to think about what technology they're using or where they're located. There's just a sort of universal experience. And we don't have that in blockchain yet. You very much have to think about what technology you're using, what services you're using, where's your money, what tokens are you holding. And my third prediction is that 2025 is going to be the year where cross-chain interoperability becomes the standard. We're seeing rapid advancements in this space, and we need to unify the blockchain ecosystem, and that's going to happen in ways that we've only been able to dream of so far. Data and assets will be able to flow seamlessly between different blockchains, creating a truly connected ecosystem. And we will get much, much closer to that internet experience where you can just go anywhere and do anything without having to think about what technologies are involved.
Yeah, this is such an important topic, and obviously we're very much a friend of this prediction. So I firmly agree that if we want to improve how the financial system works, interoperability is so key. So we don't recreate kind of like the same friction through fragmentations like we're suffering from in the legacy system, particularly given that there's a clear trend towards a multi-chain world. And so also here, just want to call out, pretty excited about the work we're doing with our partner Axelar. And so we're already seeing this at play really with the XRPL integrating, with Axelar. That in turn, with this cross-chain protocol, will integrate over 55 blockchains. And also the XRPL EVM sidechain that's set to launch in due course with this bridging technology. And so if you think about it, it's such a powerful tool for DeFi because it aggregates liquidity from multiple chains and allows really tokenized assets to move pretty much freely between them really unlocking sort of like, the friction of fragmented system that we're experiencing in the legacy financial infrastructure over time.
Yeah, the most annoying thing about traditional finance is your money has to be somewhere, and then when you need it somewhere else, it's kind of a nightmare, and maybe not even always possible to get it where you need it. We're going to break down those silos between different blockchain ecosystems. And moving assets is like the most obvious and biggest step, but it's more than that. It's about a seamless user experience. It's where liquidity, functionality, all of those things are interconnected.
Yeah, I'll just add to that, if you achieve certain level of interoperability, it will frankly create more robust markets at large, right? Be expanding liquidity pool. We can make tokenized real world assets and DeFi assets more accessible, reducing things like fragmentation, enabling cross-chain lending, borrowing, trading. I think 2025 will see, cross-chain interoperability definitely make that sort of like next step and evolve into a foundation of, most blockchain projects. So yeah, excited about that.
Well, my final prediction is about programmability. I think enhanced programmability is going to unlock these complex DeFi applications that are going to be more sophisticated and more powerful. Blockchains have been evolving to support sophisticated financial instruments, and 2025 is the year where programmability becomes a major differentiator in how institutions can use DeFi. The XRP Ledger historically has operated kind of an intermediate place. It's more functional than Bitcoin, but not quite as functional as Ethereum, and more targeted towards specific enterprise and institutional use cases, more targeted towards the dominant industry use cases. But there's a proposed vision for XRPL programmability to add more flexibility to the XRP Ledger with native smart contracts and extensions to existing functionality. And we're seeing the stage for a more versatile DeFi ecosystem.
Absolutely, David. And look, so what I just want to, mention there is I think the proposed approach of taking sort of baby steps with programmability on the XRPL, starting with extension and gradually moving towards more complex smart contracts, really ensures that we build together with the community securely and efficiently. And essentially, extensions, I see them as a tool that will allow to enhance existing features without the risks of reinventing the wheel, which is crucial for institutional adoption. If you think about it, XRP Ledger has a track record, 13 years without any major security incident and just, chugging along and performing through many bulls and bear markets. And so it's critical that whatever, programmability features are being added, that it doesn't undermine it's very sort of like, key features and design principles on the other end. And so, it means also that developers can really add custom logic directly to existing features like escrow or AMM, making them smart without introducing unnecessary complexity. And totally feel like this is the way to go.
Yeah, I obviously agree. The idea is to leverage WebAssembly as the virtual machine for native smart contracts to allow developers to create high-performance, secure DeFi applications without having to create smart contracts for basic functionality like exchanges and, like that sort of the sort of minimum that's necessary. This kind of modular and gradual approach to programmability minimizes risk. There's inherent risk with smart contracts. Many of the security incidents in the blockchain space have revolved around weaknesses in smart contracts and vulnerabilities that they've had. This will allow institutions to adopt DeFi without those kinds of security risks and align with their compliance and operational requirements.
Yeah, totally right. So the approach really balances security with flexibility well. And look, by allowing extension to customize existing XRPL primitives and introducing WASM for more complex application, developers can create tailored solutions for institutional clients, which we're in touch with on a regular basis here. And so, look, for example, if you think about smart escrows that release funds based on the token price or potential tied to KYC requirements, you can really see how this will unlock important points that participants and builders would want to see and therefore pretty excited about it. I think it's this kind of targeted programmability ultimately that institutions really need in order to build trust and sort of like scale the adoption of blockchain technology for, real world financial activity.
I'm excited to see the XRP Ledger's capabilities increase while maintaining the performance, security, low cost, speed, reliability, all of those features that the XRP Ledger is known for.
Exactly. Cool. I think we're turning the tables, aren't we?
Yeah. So, Markus, you're so closely involved in these developments. I think our listeners would like to hear your thoughts. What do you think are the biggest opportunities for the XRP Ledger in 2025, particularly in terms of institutional DeFi?
So I'll share my key trends shaping institutional DeFi. And this is really essentially interrelated with, how we're thinking about our strategy at RippleX and the contribution we make towards the XRP Ledger at large. And so I see really three, key trends emerging. Number one is I firmly believe tokenized money market funds or money market products will see or continue to see significant growth, similar to what we've seen with stablecoins in the past years. They sort of bring institutional grade risk management and operational efficiencies into the digital asset space, but also into traditional financial markets over time, as I see it. Then the second one is, the sort of like notion of the institutional adoption and direction of travel really being towards public blockchains versus, private DLT networks. And, I just expect to see a surge in institutions migrating assets to public blockchains and that trend to continue. Driven by things like trust, liquidity, operational efficiencies that these networks provide and are superior on. And look, I think this will help unlock new revenue streams for institutions and, ultimately similar to what we've seen with the internet and information, which started off being like, private networks, but really the power and beauty of the openness was what unleashed this internet revolution around the information. And thirdly, I expect corporate treasuries to diversify more and more into digital asset. So really expect more companies will diversify their treasury holdings into digital asset, moving beyond Bitcoin as well, exploring other cryptocurrencies for their operational needs. And it's fair to say we can expect, digital assets in CeFi or centralized financial infrastructure like listed futures, ETFs to expand well beyond Bitcoin and Ethereum. Just calling out here for the audience, that CME announced recently to launch a Solana future, as some of you may have heard, and also there's several ETF applications filed for cryptocurrencies beyond just Bitcoin and Ethereum, including Solana, XRP, as some of you may have seen.
I've joked, it's almost not a joke, that most of the interesting DeFi use cases to date, or the ones that have gotten retail adoption, have been some version of something like gambling or speculating. And obviously, if DeFi is going to replace TradFi, it can't, just be gambling or speculating. And your predictions are the furthest from that. Your first one, tokenized money market funds. I mean, obviously, that's about as far from gambling as you can get. Can you explain what's driving growth in that space and why you think they're important?
Yeah, absolutely. So look, why do I think they're going to play pivotal role in 2025? I think there's a few reasons. So one, essentially they function as sort of like, yield-bearing stable assets. And I think that's going to attract a lot of institutional attention. And one of the main driving forces here behind this really, that basically if you compare them one for one against stable coins, they kind of like, provide, I believe, similar liquidity over time. But they also pass through the yield and act as a stable asset within the crypto ecosystem, so to speak. And secondly, I think in a time of increasing monetary policy pressure, companies and institutions are looking for something stable, high quality assets that can withstand, crypto market volatility in particular. And so tokenized money market funds offer a compelling alternative because they're structured under existing regulatory frameworks, which makes them pretty seamless and attractive to institutions versus yield-bearing crypto products, for example. And the thing I'm personally probably most excited about is, with support from entities like the CFTC or other relevant bodies in the world, I think tokenized money market funds can also become sort of like eligible collateral, which further enhances their utility in the larger financial system. Just think about things like, intraday collateral management or treasury management, being able to reduce things like, credit risk significantly, or being able to, generate yield intraday for a few hours on some of your treasury, just unlocks a lot of opportunities, I think.
Let's talk about your second prediction. So you think institutions are going to use public blockchains to manage secondary markets for tokenized financial assets. Why do you think that's going to intensify in 2025?
Yeah, sure, David. So look, I think the trend is already underway and expected to really gain more traction this year. I think there was a watershed moment last year when basically, BlackRock announced BUIDL, and it wasn't on a private network, but it was really on Ethereum where they launched initially. And so I think there's going to be more of that. And, sort of like financial institutions just increasingly moving their financial assets to public blockchains because, it provides them with better sort of like visibility and also integration across different platforms in terms of distribution for these products. And obviously, blockchain's 24/7 nature allows them to optimize things like their capital deployment without being restricted by traditional market hours. So that's just kind of like a reason between not being on blockchains or being in traditional financial markets. And moreover, I think blockchain's efficiency in handling transactions and settlement without intermediaries is becoming, kind of like an undeniable advantage. And we're seeing this already tokenized private equity, where firms like AKR are experimenting with tokenized funds to open new markets and allow things like fractional ownership. And by leveraging, blockchain's transparency and security, institutions will streamline secondary market operations over time, I think, enabling things like quicker settlement and more efficient liquidity management overall. And, as I said initially, if you think about it, the launch of the public open internet really revolutionized closed networks that were, apparent before and fostered sort of like global connectivity and really unleashed innovation and growth around information at large. And so I think public blockchains can achieve similar results for kind of like, value networks or value and money, driven by their open architecture and unrestricted participations. And so I think they're really on track to reframe global finance and create sort of like a fully enabled internet of value over time.
Yeah, it's funny that we see institutions looking into real-world asset tokenization, and some of them are fully on board, believing that it's going to be transformative and it's going to change the way they do business. And some of them are just looking at it just because it's cheaper and it's available 24/7, and they haven't necessarily drunk the Kool-Aid yet, but they're launching on public blockchains just the same.
100%.
Your next prediction was about corporate treasuries expanding into digital assets as part of their broader diversification strategy. Do you think more companies will follow the lead of early adopters like MicroStrategy, and what are the implications?
Yeah, I would say so. I certainly believe corporate treasury will continue to diversify more into digital assets as sort of like a story of trend continuation, particularly as we expect regulatory clarity to improve further from here, given, the signs we're getting from countries like the US, but also in other jurisdictions. And we've seen companies like MicroStrategy already obviously take very bold steps. But I think this trend is going to expand across, the broader corporate landscape. I mean, frankly, you had basically an executive order in the US, declaring a strategic reserve around Bitcoin first and foremost, but digital assets at large. So I would say, the path is sort of like paved for more adoption across corporate treasuries as a result, or certainly as an aspect of that as well. And so, look, companies are just increasingly realizing that digital assets like Bitcoin offer a hedge against inflation. And by integrating them into their treasury management, they can reduce exposure to, traditional market risks as well. In 2025, so I believe we'll see more companies, especially in sort of like the mid-market segment, following the lead of larger tech firms. We're also seeing companies like Worksport, for example, adopting digital assets like Bitcoin and XRP for payments and treasury management, which showcases really the dual benefit of treasury diversification and operational efficiency. And so I think this shift has the potential to fundamentally change corporate treasury management at large, bringing basically new efficiencies and just helping companies to optimize for things like liquidity.
So with native digital assets like Bitcoin and XRP, tokenized real-world assets, stable coins, are we going to get to a fully digital corporate treasury? Not in 2025, probably.
Yeah, probably needs a few quarters more. I agree with that.
Markus, it's been a pleasure having you on today to share your vision for what lays ahead. Trends we've discussed about zero-knowledge proofs, tokenized money market funds, corporate treasury adoption of digital assets, all exciting and transformative. The next few years are going to bring a lot of growth and innovation.
Yeah, thanks, David, for having me. It was really a pleasure discussing these developments with you. And look, super excited about the future, and particularly the future of XRPL and what we can accomplish together, here at Ripple, but with the whole community, frankly, and in the year ahead. So thanks.
Well, That's all for today's episode of BlockStars. Thanks for tuning in. We'll be back next time with more insights and predictions from the world of blockchain. If you have any questions, you can reach out to me on X at Joel Katz, JoelKatz. And remember to follow at RippleXDev to keep up with the latest industry news, technical updates, and cool new developer projects from the community. See you around the blockchain.